Hey guys. I just want to talk a little bit more about the indicators that I'm going to be using to identify the tops to be able to get out. Make sure that I'm not round tripping my bags. Um, so I'm using a couple indicators in tandem. I've talked to you about them before, but I want to show you how accurate they've been working together. Okay, on its own, historical summary risk indicator from Into the Cryptoverse is incredible. Okay, it's been showing tops, right? Over here, it showed a false top. You can see BTC had a big pump, but it wasn't the top, and we even got above 9 over here. These two tops, the double top of the last cycle, we didn't break above 9. So that's why I we've always made it above 8.5. So for me, doing a bunch of back testing over the last couple weeks, 8.5 for me is a um, comfortable risk metric over here on the scale. So if we take one more thing, um, I spent a bunch of time back testing all of these different data points and seeing which work best to find tops together with the other indicator that I'm about to go over soon with you guys. Okay, so this is what I use. If you want to use the same thing, if you have Into the Cryptoverse and you want to use the same thing at the same settings, then you can take a screenshot and set those up. Or you can try your own settings, whatever you prefer. Okay, but this is what I'm watching. And here we had 5 times. Okay, 6 over here. But that's Bitcoin was so new that this one here doesn't really count as a real cycle top, in my opinion. Anyways, so 5 times we went over. This one here was a false top. Okay, so using this in tandem with our United States ISM, manufacturing new orders, business cycle, we've talked about this a few times. You can see over here also, the red are the points where we had that BTC top in the 1, 2, 3, 4 cycle tops that we talked about. Even this one over here was a double top. It topped in the red, okay, in overextension. Each time it topped in the red, okay. For that one that was a false top that we talked about here, we can we can confirm whether this is the real top by jumping over to the business cycle. That happened right here. So if we get a false top, and it looks like on the summary, the historical summary risk metric or indicator, we can double check over here and make sure they line up. If it doesn't line up, historically, it's never been a top. Okay. Now, if we take if we put them together and put it on a Bitcoin chart of every time that we hit above 8.5, the moment we went above 8.5, okay, for each cycle, the moment we went above 8.5, and we put that on a chart, sorry, the moment we went above 8.5 and we were also in the overextension. If we put those on the chart, this is what it looks like. Whenever we went over 8.5 while being in overextension on the business cycle, that's where these green circles are. That is a pretty incredible cycle top indicator. I don't know of anything better. And there's a basket of other indicators that we can use as confluence to confirm it. Menno and I are putting that together. But like, look at this. This is incredible how these two indicators work in tandem together. I say two indicators, but this one over here is a bunch of indicators in one, right? So this isn't just one indicator. This is a basket on its own of indicators tied in with the business cycle once we're overextended. So So ISM business cycle overextended into the red and summary risk hits 0.85. Look where that happened. Right at the top, right at the top, right at the top. Every time. All right, this one here is a little more complicated. It was a double top, but it hit both of them. It hit both of them. And if you're DCAing out, maybe you want to, maybe you're trying to set it for, okay, I'm going to DCA out 20% a week once this hits. Well, we're on the weekly. So if you're DCAing out every 4 weeks, then that's not too bad of a DCA out average if you're in this zone. That's not too bad at all, right? So whatever system you want to set up, how long you want to DCA out, if you want to wait till it hits 0.85, if you want to go a little bit earlier, if you want to go when it hits 0.8. I back tested going from 0.7, 0.75, 0.8, and 0.85. And this one here is bang on. 0.7, for example, was on this cycle was like way down here. That's way too early. 0.75, 0.8 start DCAing out in around this range. It's too early in my opinion. 0.85, maybe you want to make it a little bit lower and go 0.83 or 0.84. That's up to you. This is, I'm just showing you how accurate this is, and you can adopt it to whatever um, your your ability to withstand risk, right? Your risk tolerance. But this is something that I wanted to share because I think it is just incredible, and I just wanted to share it with the community. I don't think we need too many people knowing about this. Um, yeah, I just think it's wild. And where are we right now? Well, over here we're sitting at 0.333, and on the business cycle we're sitting at 47.6. We need to get above 60, above 60 to be in the hot zone, the overextended zone. So we're a ways off. We've got a lot of bull market left. So that's something that I just wanted to show you. It's exciting to have this indicator or this combination of indicators to really help us determine the top range, right? Because we want to maximize our profit. We want to do it safely. So identifying indicators that have been historically accurate, like pinpoint accurate, um, is an incredible tool to have. So excited to share that with you guys.